You're on retirement's doorstep. Is it time to downsize and declutter? And as you're approaching retirement, how much can you save in your 401k? And a question that's on everybody's mind, what will Social Security look like in the future? All that and more on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth, powered by Elevated Financial Management right here in Seattle. Your hosts are Mark Stimpson and Casey Elkins. They have 42 years combined experience in the retirement planning business, helping hundreds of their clients get ready for retirement. They're certified financial fiduciaries. I'm Morgan Patrick. My privilege each week to go back and forth with the fellas and we talk retirement. And we also give you an opportunity to take action on your own behalf. So listen up for that. These are complimentary appointments with Elevated Financial Management. Get a handle on where you are in your retirement planning process. You're one of two places. You've either started and you need a second opinion, or you have not started. You are sitting there on your accounts and you need to get rolling on it. So we'll get to that. We'll get to the appointments. But first and foremost, before we jump into our latest articles, gentlemen, how was your week?
It's been a great week. Yeah, we've been very busy. I think we talked about this maybe last week, but we're redoing some of the conference rooms here, which is great. We're kind of leaning into the Seattle thing. You know, Mark and I are both Seattle guys, right? I'm born and raised here. Mark's lived here majority of his life. And, we love the Seattle sports teams. And so we're leaning into that a bit, and we won't get too into the details. Hopefully folks will come in and see it themselves. But it's been going really well. We're actually interviewing for a couple positions at the moment. So
it's growth.
Growth, right? I mean, we're trying to hit 2025 strong. And, we get to have such a positive impact working with lots of different clients, and we want to make sure that our staff is well set up properly to take care of everybody that we work with. And so we're investing in that, and it truly is an investment, right, in time and money and training and that kind of thing. But that's our commitment, right, to our client base and to the folks that we get to have a positive impact in their lives, and that's really rewarding for us. And so we're trying to make sure that we set ourselves up the right way to take care of them.
Yeah, and I would add to that maybe a little bit that we want our client experience when clients come in here to be different. Mm-hmm. And I think that's good. Clients that do come into our office are really going to see and feel how different this office is. And I think in the long run, like Casey was just mentioning, that's our goal, because we really want our clients to have a retirement that they've been dreaming about, and it not to turn out to be just a fairy tale. We want it to be reality. And so our office is set up to help do that with our clients, and our goal, again, is to have a secure future in the retirement world for clients that are approaching retirement. Maybe they've just entered it, but it's close.
Well, I mean, it's important. I mean, this is the future. Mm-hmm. We're all headed towards retirement. And I often say, if you're going to take a trip, you usually plan it out, right? You put it in your GPS, and you make sure you have the right path, the best path selected. And guess what? In the middle of that trip, sometimes that path changes. Same thing goes for retirement planning. Working with professionals that do this on a daily basis, have seen the ins and outs of retirement many, many times. It's just it's a nice place to start. Work with people that have been in the business and can advise you as you move towards your retirement goals. And again, we'll have those complimentary appointments available for you during the course of this show, so listen up for those. Now, you guys have put together a group of articles. I really love these. The first one we're going to start with is why encourage clients to downsize and declutter. Dave Buck penned this one. And I can just speak from my own behalf. I mean, you get a little bit older, man, you acquire a lot of stuff, and eventually it's like, how much stuff do you really need? Yeah. So I can identify with this article.
Yeah, it's interesting because, I think a lot of us have accumulated, like you said, Morgan, a lot of stuff. Some people open their garage door up and then stuff wants to start falling out just as the door hits the top. And, when we are able to simplify our life a little bit, one of the things we talk about with every client that comes in, it's not just about the money. Clients need to get figured out, what do they want their retirement to really look like? And one of the things we talk about is, okay, where do you want to live? Are you going to possibly, you maybe been in a much bigger house, you were raising your children there, but now it's just you and your spouse, or possibly you've lost your spouse. It's just you. So do you want to keep a house that requires a lot more maintenance, a lot more maybe in the tax realm? So these are all things that we want to talk about with our clients. And that kind of brings me to, decluttering emails. How many of our clients have come in, Casey, that we've talked with and we share, because you shared it with me on what I need to do with passwords and usernames.
Yeah.
And I know my mom, she never gets rid of an email ever. Right. And so her box is cluttered up.
Yeah.
And if we can help our clients to declutter some of these things, it can be a really nice mental lifting of things on their, on their chest.
We all have smartphones. I want you to look at your smartphone, and I want you to go to your email. How many emails do you have?
How many unread emails, or just emails
no? Just usually they'll. For me, I've got an Apple phone, and it's a red number. It's the total number of emails that are in my email inbox.
So. You're about to get a very clear glimpse into my personality.
Okay, and again, I want to remind our listeners, we're talking about decluttering. Mark brought it up. Think about the emails, and Mark, you're going to have to give up the ghost. I want to know how many you have.
How many?
Well, I'm using my phone right now as a timer, but I will just tell you it's a lot more than Casey.
Yeah.
Casey has like 6.
I have 6. Yeah. So you can see my personality in that, right?
You have,
I have
six figures, or you have
I have 6
emails?
Just 6 total.
6, yeah.
I mean, that's amazing. Yeah.
I have 51,491.
I can tell you right now, when you just said that number, I got sweaty. That made me anxious, man.
And I think
granted, there's a lot of like spam and stuff.
Yeah.
I could probably weed that down by 10,000, but that's
40,000.
Now, I will say this. I tend to keep the majority of my emails, but I file them, right? So they're filed. They're organized. It bothers me if they sit in my inbox, but I think, there's a lot of value to what we're talking about here, because those type of things, they weigh on you, right? It's this like this unfinished business. And, this doesn't necessarily apply to everybody, right? There are some folks that, I won't mention any names, that have 51,000 emails, and it doesn't bother them, right? And they're okay with that. And that's fine.
That particular person sleeps well at night.
Yeah. And he sleeps great. Yeah. Right. And then there are those of us that are kind of on the other side of like, man, I got to get this taken care of, right? And if you don't, it weighs on you. And so that's true from a digital perspective, right? Like we're talking about with emails. But there's truth to that, especially physically in our lives, right? Mark mentioned with garages and things like that. I mean, how many people do you know that have a garage that is not used as a garage? It's a storage unit, right? And the truth of it is, when you go on vacation, let's say you take an extended vacation for a month, are you on vacation missing the things in your garage? Probably not, right? You're out living your life and doing what you want to do. And so I think we all kind of get this idea of accumulating things, right? There's a certain culture mentality behind that. But the article makes a great point that people are often concerned about whether or not they're going to have enough money in retirement. The reality is that's the number one concern for retirees. When folks walk through our door and we have these conversations and talk about what they're worried about and what they want to do in retirement, that's the number one thing that comes up is, do I have enough money to retire, and make sure that that money lasts through my retirement. If we're constantly accumulating possessions and we're nickeling and diming ourselves to death with all these little purchases that we make, that starts to be a detriment to our retirement. Whereas if maybe we were to declutter our spending and to declutter our lives, maybe sell things that we have that we're not using anymore, we would potentially be able to spend more of that doing things we want to do, not only because we have money, but also because now we have less things to take care of, less things to sort through, less things to sift through, and you have more time to actually go live your life. Now, if you love sifting through emails, Morgan, maybe you could share your contact information. Folks can help you out, because it sounds like you need an assistant, man.
Now, I do want to defend myself a little bit. That is the personal email that's probably 15 years old.
Okay, yeah.
My work email's only got about 5,000 on it.
Okay. Oh, is that all?
So I'd like to maybe use one example that I really want to share here because I think it matters. It says this: parents who simplify their lives will also be doing a great favor for their adult children.
True.
And it uses the example of what happened to Marty. He lost his mother this past spring, and he says this in this paragraph. Marty's mother established a will and a trust well before her death. It allowed her to focus on being with her family. She was not burdened with the complexities of constantly having to make financial choices. By planning her medical care and predicting her living expenses, Marty's mother invested in simplifying her financial circumstances. As a result, Marty was able to better navigate the grieving process. He focused on his wonderful memories of her mother and wasn't burdened with having to untangle financial complexities.
So very important just to, as we've noticed, declutter. I've got a lot of work to do, guys. We have an opportunity for you right here in Seattle to get on the calendar with Elevated Financial Management. Guys, what's going to happen when they get one of these appointments?
Yeah, so if you're listening, maybe you're getting ready to retire from Boeing, you have at least $250,000 more, these type of strategies really will work best for you. So please pick up the phone. Maybe you're concerned about taxes, or maybe as we've been talking about, maybe you want some ideas on how you can simplify your life. Where's your income going to come from? We have a team of certified financial planners that's going to help you out tremendously. So please pick up the phone, give us a call, and let us help you put together a plan to make your retirement successful.
Here's the phone number. Complimentary appointment awaits, 866-668-3625. That's 866-668-3625. Again, if you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call now, grab an appointment, 866-668-3625. We're back with more right after this. We are back on Elevate Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. They've got 42 years combined experience in the retirement planning business, helping hundreds of their clients get ready for retirement. They're certified financial fiduciaries, and you can find them at Elevated Financial Management right here in Seattle. And they've got a wonderful resource website. Check out efmnw.com. It's all letters. efmnw.com. There are links to the TV show and radio shows in podcast form. And Casey, before we dive into our latest article, you also felt the need to have a website dedicated to taxes, taxbillseattle.com. Tell us about that.
Yeah, taxbillseattle.com, really valuable tool. We do talk a lot about taxes, and the reality is that when you're thinking about your retirement and the income that you're going to have and how your investments are structured to create that income, and can you make that income last through the rest of your life, those kinds of things, taxes have to be part of that conversation. And so we created this tool as a way for folks to be able to dip their toe in the water and see what taxes are going to look like in their qualified accounts. So your IRAs, your 401ks, because the money that's been saved there has not yet been taxed. But every dollar that you take out, not only the money that you put in, but also the growth, every dollar that comes out of your 401k or your IRA, you're going to pay taxes on. And so that is essentially a cost in retirement that we have to account for. And you can either do something about that now when we're in one of the most tax efficient windows in history, or you can kick the can down the road and see how that works out in the future. So this is your opportunity to compare. If you go to taxbillseattle.com, you can enter some basic information. It'll calculate some numbers for you, and it'll show you if you don't do anything, here's what that tax burden looks like. And if you were to make some adjustments, pending what those adjustments might be, this is how much you could potentially save. And so it's a great way for folks to kind of have a little self-service portal. And then if you find information there that you think is intriguing, there's a way for you to reach us from there. And we'd be happy to have a further one-on-one conversation to see what can be done.
Again, that website, taxbillseattle.com, taxbillseattle.com. All right, we're on the article train. Our next one, encourage clients to board the faster 401k train. This is from Kimberly Foss. Obviously, this jumped out at you guys.
Yeah, it did. This is This is really interesting, actually. So I think I'll kind of touch on maybe the psychology behind this in a second. But we can contribute to our 401ks, IRAs. I think everybody's aware of that. For 2025, the plan participants in a 401k can contribute up to $23,500, which is up $500 from last year. So that's not a huge jump, but it's a little bit of a jump. And in addition to that, the existing $7,500 catch-up provision for 50 and older. So if you're over the age of 50, you can contribute an additional $7,500. And then here's the big thing: Secure 2.0 allows an additional catch-up contribution of $3,750. So people that have 401ks, 403bs, 457s over the age of 60 can stock away as much as $34,750, right? That's quite a bit to save in 1 year, and that does not include any growth or employer contributions, right? That's your side of it. So the point here, and this is kind of the psychology piece that I was thinking of, is that the IRS, the government, understands the strain that is put on people's retirement plans because they haven't been saving enough. Right. And they are opening the gates for you to save more than ever has been done in the past. Not just adjusting for inflation, but actually changing the rules so that you can save more. And this is why we bring this up, because this is your opportunity to take advantage of what's there, right? Will this be around forever? I don't know, right? I mean, I certainly hope so, and I certainly hope they up the amounts. But this is your opportunity to get a plan in place and make sure that you're doing all that you can to positively affect yourself in the future.
Well, I want to add something to what Casey just said, because this is startling. I hope the listeners really pay attention to this. Listen to a couple surveys. One was done by CNBC, one by Bankrate, basically .com survey, and then Vanguard, How America Saves 2024 report. Every one of them has Americans way behind, and in the total number that are behind for saving. But what was astounding to me was the Vanguard report, where it said only 14% of employees are making the maximum contribution to their tax-advantaged employer plan. 14%. Okay, now think about that. That means 86% of that study are not doing it, not maxing out. So you have to ask yourself why. Now, we know there's certain circumstances. Life is tough. Everything is so much more expensive. We all know what, a gallon of gasoline and what eggs and milk are costing at the store. But boy, that is a startling statistic that I hope listeners are paying attention to, because if you don't have enough saved up and all you end up with is Social Security, you're going to have that, what we call the pain of regret. Yeah. And there's no way to fix it. Once you're already there, right? There's no time horizon. So you could be in big trouble.
Well, and again, in this section where it's like you can make a difference, I mean, I also look at that as the advisor can also make the difference.
Yep,
it's almost like if you're working with a professional, they're going to advise you, but they're also going to hold you accountable. Mm-hmm. It's very, very important to put your money away. And as Casey mentioned early on, the older we get, they're giving you even more incentive. Think about it. When you're younger, you have so many expenses going out the door, kids, whatever's going on early in your life. But as you start to age, you start to acquire a little bit more of that cash and hold on to it a little bit more. Now you can really put it to work for yourself.
Yeah, you can. And, I appreciate this point in the article. It says, don't ignore lifestyle creep. And, we talk about this a lot. I think this is so important. I mean, think about when you were first starting out. You're 20, 25 years old, right? And you make $30,000, $40,000, whatever the number was, right?
I only had 5,000 emails back then.
Oh, wow. I'm proud of you, man. But, you've got $30,000, $40,000 worth of income, maybe less, right? I don't know your individual circumstance, but let's kind of play that scenario out, right? In that circumstance, you find a way to live on that, right? If you got $40,000 coming in and that's all that's coming in, you find a way to make that work. And don't get me wrong, that's not the funnest lifestyle, right? You're not going out with your friends and doing all those things, but you get a pay raise and now you make $45,000 a year. Well, do you save $5,000 or do you just spend $5,000 more, right? Probably you spend $5,000 more. And you know what? I think we can all understand that, right? Because when you're first starting out, that income is low. So as your income gets greater, your lifestyle increases, but it reaches a certain point where are we going to start taking care of our future selves? And that's where this 401k contribution comes in, planning out your retirement instead of satisfying the desires of your current self. Do we save that money for the future, right? Or do we allow our lifestyle to continue to creep up? And now I make $120,000 a year and I don't save anything. I spend it all. And we have folks come in that make great income and spend the majority of their income, and are living paycheck to paycheck with multiple six-figure incomes, right? And so that's where we have to really start to take stock of how we're living our lives. And this really kind of ties back in with the previous article that we were discussing about decluttering. Are we just accumulating things and spending because we got this good paycheck coming in and we spend it on this and that? And we really don't have a lot to show for it because it's kind of frivolous spending, right? We want to make sure that there's a plan not only for today, but also for the future. And it takes discipline today to make tomorrow a success, right? So we have to put in that time and that effort to do that.
Yeah, in fact, to go along with what Casey just mentioned, this is where sometimes we have to have heart-to-heart, frank conversations with our clients. You know, and I love what it talked about in this article, how important when you're in that runway, that last little bit, you're landing the plane, you got 5 years to go, you want to finish strong, right? And if you can save an extra $5,000 to $10,000 per year instead of spending that, like Casey mentioned, it can make all the difference in the world into your increased spending in retirement. So this is something hopefully everybody's paying attention to because you want to save, because usually the last few years that you work, you're also making the most money that you're going to ever make, right? So are you saving any of that, or are you spending it like Casey was just mentioned? Because if we spend it all, hopefully had a great vacation, but if it leads to running out of money, we're going to forget about that vacation, I promise you, and it's going to be, what am I going to do now?
Right. It really does. It takes a balance, right? We've seen folks that come in that are so focused on saving for retirement that they're really not living their life today, right? And like we just discussed, we have folks the other side of that, right? That are living so much of their life today that probably not going to have much of a retirement, right? So again, it comes back to a plan, and that's why we're always offering a written financial plan put together by our team of certified financial planners. We'll talk about what that future does look like for you. Are you on track savings-wise to make sure that you can have the retirement that you've been thinking of, been dreaming of, been wanting? How do you make sure that your investments support your lifestyle instead of you adjusting your lifestyle to fit your investments? All things that we'll discuss. We'll talk about taxes, the risk you're taking. There's a number of other things, but don't hesitate. Pick up the phone. Give us a shout.
Here's the phone number right here, 866-668-3625. That's 866-668-3625. Again, if you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Got to have that balance, folks. Need to have that plan. Again, if you haven't started or you need that second opinion, call the number right now, 866-668-3625. There's no obligation here. You're not agreeing to become a client. This is an opportunity for you to test drive Elevated Financial Management, 866-668-3625. We've got more articles right after this. Elevate Your Wealth, hosted by Mark Stimpson and Casey Elkins. Between the two of them, 42 years combined experience in the retirement planning business, helping hundreds of their clients get ready for retirement. They are certified financial fiduciaries. You can find them right here in Seattle at Elevated Financial Management. Again, Elevated Financial Management. Great website, EFMNW.com. All letters, EFMNW.com. Good resource for you. TV show links are there. We also have our radio shows in podcast form. I'm Morgan Patrick. It's my pleasure each and every week to go back and forth with Mark and Casey and talking about just the different articles, the different subjects within retirement planning that really caught their eye for the week. And guys, we are now at a retirement expert is giving her notice. Brian J. O'Connor penned this one at the end of last year, but this really, this caught your eye.
Yeah, this was a really good article because we specialize in Social Security planning. I'm a nationally certified Social Security advisor. And the woman that we're talking about here, Alicia Monell, she is been involved in this think tank at Boston College since 1998. So she's been there a long time. And they study different retirement issues. And one of the things that she got a question, and this was the question, it says, people suggest fixing the shortfall in funding for Social Security benefits by getting rid of the wage cap. The cap limits the amount of earnings subject to Social Security tax. Now, I kind of like that idea personally. If somebody makes $400,000, why not pay tax on $400,000? Because I know the way I feel about it is I know I'll get something for that tax, right, on the back end. I'm going to get Social Security. And hopefully the big thing that everybody's worried about is that there's going to be a reduction. The latest report from the trustees is that, 9 to 10 years they're going to be cutting Social Security by about 20 to 25% if they don't do something. So, but people are worried that it's going to go away. And like she says, that's nonsense. It's not going to go away because even at that point, there's still going to be at least 80% of those benefits are going to be being brought in each year to pay clients or people, you should say, for their benefits that they've applied for. So it going away, that's nonsense. It's not going to happen. Now, there could be a reduction if they don't begin to do things. Things have been thrown out here like, well, why not let's raise the income cap limit on what Social Security we pay into. I like that idea. If we make $1 million a year, we pay into Social Security based on $1 million. We didn't look up what the limit is for 2025, but I think it had a cap of right around
176,000.
Yeah, 176,000 this year. See, so again, why
just
not
a little
do
bit
that?
more than that. Yeah.
If I make 400,000, I pay on 400,000. There's also talk that they're going to raise the full retirement age from anywhere from 66 or 67, depending on the year you were born, and make that be 70. I'm not as big a fan of that. I don't think most of us would be as either, but they got to do something. They've been kicking the can down the road like we've been talking about for a long, long time. And the piper's going to be paid here, and a lot of us may not like what's coming. That's why we need to really think about this, and we need to get government to do the right thing. They are the ones been kicking this can down forever because nobody wants to deal with it because they know if they do and they cut benefits, they're not going to be reelected. That's for darn sure.
Well, I mean, I think you hit on it. The big concern is that we just don't know. I mean, because really every 4 years, unless there are consecutive terms by a certain president, there are going to be changes. There's always discussion. So the what if scenarios for Social Security, that's going to be an ongoing theme.
Yeah, I think that's the thing that always I come back to in my mind, right? Is that, and the article really actually talks about this too, that Social Security is called the third rail of American politics. Any folks serving in politics at the time that they go to cut Social Security, that's a black eye for not only for them specifically, but for their party. I personally struggle with that idea. And Mark and I kind of debate this back and forth. I think we have differing views to some extent on this side of things. And who knows what's going to happen? I mean, we don't know for sure. But I will say this, that raising, and this is a direct quote from the article, and I think this is really good. Raising revenue would be politically a very hard thing to do because it means raising taxes now for something that won't happen until 2033. And I get that, right? I understand the struggle that is. The very next sentence says, but I think it's harder to conceive of the situation where Congress would allow across-the-board cuts to retirement benefits. I agree with that too, because you have to play that scenario out. Let's say they do cut Social Security by 20 or 25%, 9-10 years from now, whatever that is, right? If they go and cut that across the board, they are not only damaging the folks that are on Social Security, but that will have a lasting impact on their children. Because when mom and dad can no longer support themselves in retirement because their Social Security got cut by 25%, the kids are going to feel responsibility to step up and help mom and dad. And that's a great thing that hopefully they'll be in a position to do. But that means that has a detriment on their retirement, right? And that has a cascading effect. So to me, it seems much more likely that they would raise the taxes to deal with this future problem instead of cutting that benefit in the future. But the reality is like you said, Morgan, we don't know, right? And this is where this really ties back into the article that we were discussing in our last segment about, are you saving for your retirement? Because if Social Security does get cut, is your retirement set up? When you think about your retirement plan, is your retirement set up to deal with a cut in Social Security 8, 9, 10 years from now, right? Or a number of any other things that could happen over the course of your retirement. And I want everybody to just pause for a second. If when I say, when you think of your retirement plan and the thing that comes to mind is your retirement statements, I want to be very clear. You do not have a plan.
Yeah.
You have a portfolio, but you do not have a plan. Your retirement statements do not talk about how your income, what your income will look like. They do not indicate how your income will look after Social Security cuts. They do not talk about what taxes you're going to pay. They do not talk about health care and Medicare and long-term care, all those kinds of things. You have got to have a plan that creates success for you, regardless of what happens with Social Security, regardless of what happens in the market. And the truth of it is, with the way that things have gone and pensions have been gotten rid of in our country and in a lot of others as well, the onus is on you as the retiree. You are the fiduciary of your plan, and you have got to grab the bull by the horns and take advantage of the opportunity that's in front of you.
Yeah. There's an important two sentences I want to share. Listen, and we're talking back about Social Security. Notice what this says. People love this program and are willing to pay for it. I think if you just be straight with the American people about what needs to be done, there would be support for fixing it.
Yeah.
What a blanket, easy statement. That I'm so in the camp with her. It's like the problem is government always wants to cover it up or not talk about it straight, or it's just a bunch of political talking heads and they never follow through. But if everybody was honest about it and fixed it, people, I know I want it. Right? I could be drawing right now myself. I love the benefits that I'm going to get from Social Security because I don't have a pension, as you mentioned.
Right.
This is part of my pension. Right? This matters. And so they got to get this fixed. But you better have a plan, like Casey said, because if this gets whacked 25% 10 years from now, boy, and you don't have a way to fix that, that's going to, as you said, kids are going to have to step up and everybody's going to be a lot more depressed than what they are now.
You know what? They will write books about the impact that has on a country, right? 30 years from now, 40 years from now, they will study in school the impact that cutting income in retirement has on an entire nation, not just a family, but on an entire nation. And that's it, right? Is people have a tendency to kick the can down the road and we'll address this, right? That kind of thing. It's almost kind of like accumulating 51,000 emails, right? You're really, you're just accumulating and you're kicking the can down the road. You're postponing dealing with the inevitable.
I'm hoping it goes away. No, Casey, I think you bring up a really good point. It kind of ties back to when we were talking about lifestyle creep and people not doing a good job of saving. And it is just across the board. And now this article that we're discussing on Social Security, the next question I think really hits it. Nearly 2/3 of all workers can access a workplace retirement savings plan. Just 45% of them participate. So it's almost like they're ignoring the fact that they need to start saving and they're just not doing it. And 10 years or less before retirement, the average 401k balance is less than $250,000, which won't provide much retirement income at all. Yeah. And it's almost like we don't want to admit that Social Security is in trouble. Right. It's going to be there for us. We're ignoring it.
Yeah, and that along with, I love what else she said, that you can create, we're helping a lot of our clients create a what we call a hybrid retirement, working as long as you can, especially if you like to find something, you get away from a job you really were glad to get away from, but there's a lot of us that have jobs that we're truly making a difference. Like Casey, we love what we do here. Not everybody can say that because I could retire right now, but I'm not going to because I'm making a difference. And so if you can work and find a hybrid type of job that you really like that will add to income and that allows your assets to continue to grow, maybe you don't have that plan. So it's important. There's a lot of different ways to solve these issues, but you have to talk to somebody. You got to make a plan.
Do you feel overwhelmed, kind of like somebody that would have 51,000 emails? Get a plan, work with a pro. Mark, we've got spots on your calendar. Walk us through how these appointments are going to go.
Please, if you're listening and you're getting ready to retire, or you are retired but you have questions about taxes, about income that you're worried about because you don't have a pension, you only have maybe a 401k plan, we have a team of certified financial planners that'll take a look at your situation, and we will help put together a plan based on what you want and what you need. We're going to talk about long-term care a little bit. All of these different things. If you're stressing about this at all, please pick up the phone, give us a call. Let us help. So please, again, pick up the phone if you've got questions, because I think we can help.
This is an opportunity right now. Call and grab an appointment, 866-668-3625. Again, if you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call the number, secure an appointment, 866-668-3625. And again, you're not agreeing to become a client. There's no obligation here. This is a fact finder mission for you, how you're doing with your planning or lack thereof. 866-668-3625. When we return and elevate your wealth, it's time for Retirement Scenarios. Elevate Your Wealth, hosted by Mark Stimpson and Casey Elkins. Elevated Financial Management, where you can find them right here in Seattle. They've got 42 years combined experience in the retirement planning business, helping hundreds of their clients get ready for their retirement. They are certified financial fiduciaries. I'm Morgan Patrick. Again, my privilege each and every week to go back and forth on so many different retirement topics that are important to not just Mark and Casey and myself, but also to you, the listener. And if you learn anything from this show, it is so important to be proactive as opposed to reactive. Have that plan for retirement. Take some stress off your plate. We've all got stressful lives, but if you have a plan for retirement, you can exhale just a little bit. Have that confidence moving forward. All right, it's time for scenarios, and I'll throw the scenario at the guys, and we'll see what they come up with. Mark, you're first up. And Casey, you can chime in as always. A retiree is considering a fixed indexed annuity to protect against market downturns while still getting some growth potential. They're unsure about how interest credits are calculated and how caps or participation rates might affect growth. What details should they examine here?
Well, I think one of the first things that should be really figured out is, what do you want this chunk or section of your funds to do, right? That's really where it starts. We're very, with every client that comes in here, we are finding out what that client needs. Then we're going to find out what vehicle will solve that problem. Casey always talks about the illustration of a truck. You're not going to buy a Prius if you want to tow a vehicle. Right, I mean a trailer or a boat or something else.
You
right?
don't buy a Prius to tow a boat, and you don't get a big truck for good gas mileage.
Yeah,
right? It's
you just
purpose
don't.
built, right?
Yes.
You want something purpose built.
And so we're going to do the same thing with this client. So a fixed annuity can be a really powerful tool if you're wanting guaranteed income. The one awesome thing about in the annuity space is once that account value goes to zero, the payment continues. That's what a lot of people don't understand. So every pension plan in America is an annuity. Social Security is an annuity. So again, but they have scenarios built inside of these contracts that to a lot of people could be fairly complex, right? So you've got different indexing strategies that could be based on, let's say, a participation rate. Well, what is a par rate, or what's a participation rate? Well, in its simplest terms, if let's say you're using the S&P 500 and you have a par rate of, let's say, 50, you're going to get 50% of what the S&P does for that year. If it's an annual point-to-point, or if it's a 2-year point-to-point, which is even more deep in the weeds here. But the point is, whatever the time period is, and if it's a par rate of 50, you would get 50% of what the S&P does. Mm-hmm. You would get, if it's a 100% par rate, you would get 100% of whatever that does. And it's the same way when it comes to cap rates. If the cap, let's say in an S&P is 8%, you could earn up to 8%. If you if it goes to 10, what are you going to get? You're going to get 8, right?
Mm-hmm.
It's the cap is 8. So if you made 4%, what would that mean? You earn 4%, so you're below the 8%, so you're going to get credited the 4%. So that kind of just touches a little bit on what a cap and a par rate is when it comes to the annuity world.
And I think too, as long as we're talking about annuities, there's a couple things I want to mention. Number one, an annuity is not for everybody, right? That's just the reality of it. It doesn't have a place in everybody's retirement plan. It might have a place in yours, right? If you're thinking about what Mark was just talking about and trying to figure out, does that make sense for you? Maybe it does, right? It takes a conversation to figure that out. And the reality is that an annuity at times, right, can be a bad word. There's sometimes, that kind of gets people's hackles raised, right? Kind of like having 51,000 emails kind of gets your attention a little bit, right, Morgan? But that annuity piece, it's not a bad word, right? It really can be a big benefit for a lot of people if it's used in the right application. If it's the right tool for the job, then that's great. And that's exactly the type of planning that we do here, right? You'll notice that when you listen to our show, we're not talking about hot stock tips and the next new company that's coming out and there's a great IPO and those kinds of things, because that's not really what solves a problem in retirement, right? When you think about your retirement, there are a number of concerns that come up. There's risks that come up and things that need to be addressed. And so it's about finding the right tool and using it in the right application to create that success for you in your individual circumstance. So again, the point being that an annuity might make sense for you. There are things to know. It is a little bit higher level of complication than just, I bought Apple stock and it went up, right? There's more details than that, right? And so that's where you have to work with the right group. You have to work with somebody who can understand these things and explain them to you in a way that you can understand them and help you figure out how it fits in your individual retirement plan.
And you guys have said this before on the program. You are the advisors, but the client or the potential client, they're the decider. Mm-hmm. I think there's a misconception out there when people feel like, well, if I grab an appointment, they're just going to sell me something. They're just going to throw something at me.
Not at all.
They're going to expect me to walk out with something. That's not how this works. It's about planning. It's about options. It's about creating that path to get you to that successful retirement. And that takes teamwork. It's not just the guys. It would be you too. You'd be involved. I mean, it's about planning and being ready for what is going to be your retirement and be confident in that retirement. All right, we're in the middle of scenarios. There's going to be an opportunity to get on the calendar with Elevated Financial Management. These appointments, again, are complimentary. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. You can grab an appointment right now by simply calling 866-668-3625. And again, we say this every single time. There's no obligation. You're not agreeing to become a client. This is an opportunity for you to take a look under the hood, right? Take a look at what's going on with your stuff, as well as get to know Mark, Casey, and their team. 866-668-3625. All right, next scenario. Casey, we'll start with you on this one. Mark, jump in on it. A retiree with $750,000 in traditional retirement accounts is worried about the high RMDs in the future. Now, if they convert $100,000 now while in a 24% tax bracket, how might that affect their total tax burden over the next, say, 20 years?
That's a really good question. And you know what? This is a perfect time. If anybody is relating to what Morgan just mentioned, this is a perfect opportunity for you to go to taxbillseattle.com, because that will address exactly what this scenario, what this question is about. And does it make sense to do a conversion now at your current tax bracket? And if you do that, what does that look like 10, 15, 20 years from now? That's really the big question, right? Because when we do a conversion, like we're talking about in the scenario, that's not an immediate positive to us. That's an immediate negative to us, right? We're choosing to deal with taxes right now to create a positive tax-free bucket in the future. But it takes time for that to be valuable. And so, converting $100,000 now while in the 24% tax bracket, if you're going to be in a 24% tax bracket in the future, well, then that makes a lot of sense, right? If you're going to have much less income in retirement, and I have a caveat to that in a second, but if you're going to have much less income in retirement, well, then converting at a 24% tax bracket probably doesn't make a lot of sense. But there's a couple caveats there. Number one, we don't know what tax brackets are going to look like in the future. Now, we know that current tax law sunsets at the end of 2025. With a recent election, that could change, right? That could be prolonged. It could be pushed out. But given the fact of the debt that the country has, I think at some point taxes are going to have to go up to deal with that debt. And I think everybody's in agreement with that. And are you actually going to have that much less income in retirement? Are you going to have a big lifestyle cut when you retire? And the answer for most folks is that, one, they don't want that, and two, that's probably not the circumstance. So if converting at 100 or converting 100,000 now in the 24% tax bracket, I'm thinking that for most folks that we work with, they're probably going to be in a similar tax bracket in retirement. And so that probably does make sense. It lessens your tax burden overall, but it's the pain of regret or the pain of discipline, right? And it takes the pain of regret to make sure that your future self looks back and thanks your now self for doing that, right? But it is technically a detriment to you at this moment, but it's a positive to you in the future.
And to go along with that, there's a couple things everybody needs to understand. So it all depends on what your other income sources are, right? Because we like to do what we call bracket stuffing. So, the bracket for 24% married filing jointly, it's about, I'm just going to use $385,000. It's gone up a little bit for 25, but let's just use $385 for the sake of argument. If you made $200,000 and you wanted to convert 100, that's going to take you to 300, right? You're still well within that bracket, right, of 24%. So it needs to be done strategically so you don't make any ginormous mistakes. We don't want to jump into another bracket if we can avoid that, because then we have to worry about the IRMA, which we're not going to get into that. That's your tax on your Medicare. So there's a lot of reasons why you need to be talking to someone that can help you with taxes. And so many firms, if you ask them a tax question, they just go tell you to talk to your CPA or your tax preparer, right? And that's just not the way to put together a true plan. Taxes have to be addressed, and we're going to address those with each and every client that we talk with.
Yeah, it really does have to be part of an overall larger plan, right? It's great to talk about Roth conversion, and it's kind of a buzzword, right? Yeah. It's something that gets discussed a lot, and we talk about it a lot because there is a lot of value there. But it really has to be part of an overall plan. We can't make that individual decision. I always use this idea that planning is like dropping a rock in a pond. When you make one decision, it has a ripple effect and it hits everything else, right? So for those listening at home, this is your opportunity to get a written financial plan put together by our team of certified financial planners. Before you drop that rock in that pond and make a singular decision, find out what impact it's going to have on the rest of your retirement, on the rest of your financial plan, and make sure that all of those parts and pieces are working together to create success for you in the future. I want to be really clear. This is not an agreement for you to become a client. This is not an agreement for us to take you as a client. This is simply an opportunity for you to have a one-on-one conversation to figure out what your retirement's going to look like, the path that you're on, and then determining if something can be done to improve that path. So don't hesitate. Pick up the phone. Give us a call. We're happy to help.
Here's the phone number, 866-668-3625. That's 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Again, get some peace of mind, grab some confidence, call the number, 866-668-3625. Another edition of Elevate Your Wealth is in the books, powered by Elevated Financial Management right here in Seattle. For Mark and Casey, I'm Morgan. We'll see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.